Hey, what's up, everybody? You know what time it is? It is bull market time. So bears, take your suit off. The bulls are in charge. We are going to be going over the best cheap stocks to buy now for November 2021. And I'm super excited because look, markets are at all-time highs. You see the Russell 2000, the S&P 500, you've got the NASDAQ all rallying higher. This is not the time to be getting worried. This is the time to be getting bullish. And so we are going to be looking for 5 potentially undervalued stocks in this environment, and they are all great ones. Hey, I'm Luke Downey, co-founder of mapsignals.com. We don't follow the news, we follow the big money. We learned to do that on our trading days back when we were on Wall Street. We noticed that portfolio managers would focus on the highest quality stocks out there. Those were the names that they were buying up. We ended up leaving Wall Street and creating a data firm to look for these outlier stocks. So we're going to be going over some cool charts. If you like this type of unique content, make sure to like and subscribe to our YouTube channel. We're almost at 1,000 subscribers. I would love to hit it soon. That would be a great milestone. With that out of the way, let's go ahead and start talking about markets before we get into stocks. What do we know? We know that everything is at all-time highs, and specifically high quality stocks are getting bought up. Let me show you what I mean. So before we get into stocks, I want you guys to see the data. I think it's very important that you focus on data in your investing process. So normally we have the big money index, which measures all the money going in and out of stocks. But we have new charts now that can allow you to see this on the sector basis. So XLE, that's the energy ETF in the background here. And these are the daily buys and sells of energy stocks. And what's super cool is when there's a lot of buying, when things are frothy, we tend to be near the highs for the ETF. Same thing happens whenever you see these big red bars. Those are sellers. When there's a lot of selling, we tend to be near the lows. You can see over here, there's a lot of buying. And then you have these 2 moving averages, which are really important. The top one being the moving average of all the buy signals. And then the lower one is measuring all the sell signals. So for energy, one of the strongest sectors year to date, you see that there was a lot of buying. But what's really interesting is that buying has slowed dramatically, and you can see that selling is practically zero. I think that energy might be nearly overbought, at an extreme way. So why am I bringing this up? I believe portfolio managers might not be betting on energy like they were a couple of months ago. They might be looking for other opportunities. So that brings me to 2 sectors that have some of the stocks that we'll be talking about today. So what is getting the love right now? And that is the discretionary space, right? Where we spend our money. You can see yesterday there was a flurry of buying that went into discretionary stocks. You can obviously see the XLY ETF is just blasting higher. Anytime you see buying, that is bullish. Follow the big money, right? Let's do it for technology. Again, it's been chop city for the past few months, but what is more important is we're starting to see some high quality stock buying. And more importantly, selling is starting to slow. This is very important because I want you guys to know the methodology before I start showing the 5 stocks. Last thing I'll tell you is we look at 6,000 stocks per day. We have them ranked by number 1 to 6,000, looking for the strongest and weakest stocks out there. So to whittle that universe down, I looked for 5 characteristics. Number 1, I only wanted to see stocks with prices between $10 and $200. Number 2, I wanted to see that the cash flow from operations is positive. That means if it was negative, you're not going to be part of this list. Number 3, I wanted to see that EBITDA growth was also positive. So if you've got negative EBITDA growth, you're not here. I also wanted to see the number 4 characteristic is that the 1-year sales growth is positive. Don't want to see negative, get that out. And then finally, I wanted to see the forward PE be 50 or below. And that could basically present some value. And so that took 6,000 stocks all the way down to about 650. Then I ranked them from top to worst. And now we're going to get over 5 of those stocks. So let's go ahead and get into it. And for the number one stock, it is none other than Crocs. People that know me know that I've been very bullish on Crocs. It has been in our data constantly, right? It's a rubber shoe maker. Kids love them. They're actually having office wear shoes. I think I saw somebody in the office recently wearing some of these. So whatever you think, they're very popular. And it doesn't matter what I think. What does the big money think? You can see it has been a one-way train higher. And so you're looking at some of these big money signals. These are the green signals. That means the stock is breaking out with big volumes, indicative of institutional activity. You don't want to fight that trend. But recently there was a sell signal, and then we see the stock just bounced right after it. Someone asked, how do you know when a sell signal is negative and how it's positive? Well, I'll show you how I go about that. And that is, I want to look under the hood and find out, is this a positive company? You know, do they have growing sales? Do they have growing earnings? And if they do, and they have the big money, then they will show up on our top 20 list. So going back to 2015, these blue signals indicate that Crocs was a high quality stock. In fact, it was a top 20 stock in our research many, many times. That's what all these blue signals indicate. I call this the stairway to heaven. A lot of the best stocks have these signals. And you know what? If you're going to walk up the stairway to heaven, why not go ahead and wear a pair of Crocs? It is an amazing company, but don't take my word for it. We need to look under the hood. So let's go ahead and do that. So here we are. It's a discretionary name. And as a reminder, those technical signals, those buys and sells, that's that chart over here. And then I have that outlier chart, which is down below. And that just lets us know what is the long-term trend of Crocs. The share price is right around $170. The market cap is just under 10 billion. So it's not that big. For 1 month, it's up 20%. And then you look at the big money signals year to date, 21 of those bad girls and only one sell signal. That's very bullish. Forward PE is 22, and the 3-year sales growth rate is just over 10%. So look, the big money checks out, the fundamentals checks out. That's a winner chicken dinner. So keep Crocs on your radar. It popped up through this net, and I was just, I just had to put it in here. I was like, this is a great company. And that's what we only want to showcase on our YouTube channel. So let's go ahead and get to the number 2 stock. It is none other than eBay. And eBay is really interesting, right? It's like they have these online auctions. You could buy stuff now, but you can find basically anything on eBay. And what's great about it is whenever you have all these supply strain issues, eBay has a lot of products that you can't find anywhere else. But more importantly, what's the big money story? It is juice. There's just money going into the stock. And then if we go back and we look out to 2015, has it been a top 20 stock? And it has multiple times. That tells us everything that we need to know. We know that this is a quality stock and it's getting big money love. There's no sell signals. Let's go ahead and look under the hood. And here you see eBay, it's a staples company. Stock price is $75. The market cap is just under 50 billion. So, I mean, it is a large mid-cap company. For 1 month, it's up 9%. Big money year to date, it's got 13 of those bad girls. The forward PE is 19. In this tape, that is not that expensive. The 3-year revenue growth rate is just over 2.4%. It's not a big grower, but I just think that with all this big money that's going into the stock, I think that portfolio managers see this as an undervalued company. And for that, it makes the list. So let's go ahead and look at our number 3 stock. This is a good one. It is none other than MaxLinear. Now, this is a smaller semiconductor company, and I'll tell you a funny story about it, but really quick, you can just see on a 1-year basis, this stock has somewhere to be, and that is up, up, and away. I mean, you won't see many charts that look like this. No red, all green. But why the stock is so interesting, and full disclosure, I own this in personal and managed accounts, is I bought this stock years ago right here, literally right here. And the reason I did is because it kept reappearing on our top 20 list. So I bought it about 29 bucks, I believe. And then literally for years, the thing just fell out of bed. I mean, it was just so sad to look at. And I was just depressed holding the stock. It actually went down to $8 during the pandemic. And then it had one of these rare sell signals, which, man, that just means that it didn't have the best fundamentals whenever it appeared right here. But I did not sell it. Everybody knows, or they should know, that when it comes to my personal holdings, I don't sell, or I try not to sell, and I held this one, and it's actually been a really big winner. So leave me a comment if you've ever had a stock like that where it just literally was so beautiful, then it just crapped the bed, and then you kept holding it though, and then now you have a big winner. Makes me think of like Tesla. That happened with me, but look, all I know is that the stock used to be an all-star, and I think what's really important is what is starting to show up under the hood right now for MaxLinear. So let's go ahead and take a look at that. So it's a tech stock, it's a semiconductor name. Share price is 66 bucks. The market cap is just around 5 billion. So it is not a huge company at all. I love these $2 to $10 billion companies. For 1 month, the stock is up about a third. I mean, they just had great earnings. You can see tons of juice going into this stock. It's probably getting near overbought, but I think it is in a long-term uptrend. 11 big money buy signals, 0 sell signals. Forward PE for an explosive company like this is 25. That is not terribly expensive, but get this, the 3-year revenue growth rate is just over 8%. That is very, very bullish. Keep MaxLinear on your radar. Nobody's really talking about it. And usually when people aren't talking about it, there might be some opportunity. So with that out of the way, let's go ahead and get to our number 4 stock. Dun, da, da, da. And it is none other than YETI. So YETI is just one of these great companies. I mean, it's one of these outdoor names. If you're out there fishing or you're hunting or whatever, you know, I'm not a hunter, but you know, if you need to keep your drinks cold, you need a cooler, YETI is the place to go. And they make just great products. People love to talk about them. But what is the big money show? It has been a lot of green. There's been a couple of sell signals, but this is a high quality stock. And usually when you see those sell signals, the stock tends to bounce. I think that's portfolio managers coming in, value hunting. How do we know that it's a high quality stock? Well, it's appeared multiple times on this top 20 report. And this is a younger company. It's only been a stock since 2018. So whenever I see any types of companies like this that are continually showing up on the top 20 report and it's pulled back a little bit, that gets my attention. But don't just focus on the big money. You also need to look under the hood. So let's go ahead and do that really quick. So what we have here is a staples company, right? Share price is $100. You can see it's a market cap of right about $9 billion. For 1 month, the stock is up 17%. I love how it bounced right off of that sell signal. 9 buy signals, 2 sell signals year to date. Forward PE is 40. Wow, that might seem expensive, except for the 3-year revenue growth rate is just about 20%. That is huge. I think this company is going to continue to just make great products. I think people are going to be excited about it. I think the company is literally going to go a lot higher in the years to come. We shall see. But let's go ahead and get to our number 5 stock for November. And it is none other than Copart. Now, Copart has been one of these names that continually show up in the research. And when I was, when I sifted these stocks, I was like, oh my gosh, I can't believe Copart is here. But get this, whenever you look at the data, I think you're going to see a very clear picture emerging. So you look at all of the big money signals. So earlier this year, there was that big growth scare. Copart was part of that. A lot of sell signals here, but then it got that big money love. Recently had another sell signal. The stock popped. But if you go back to 2015, look at all of the blue signals. That is your stairway to heaven. Very few companies have a picture like that. I mean, that is rare company, and Copart is an awesome stock. Let's look under the hood. Bum, bum, bum. And then here we go. Okay, it's a discretionary name. It's $153. The market cap is 37 billion. So, I mean, it's not tiny, but it's not huge. For 1 month, it's up 10%. Big money year to date, 13 of those bad girls. There were 5 sell signals, which is, unfortunate, but I think that's opportunity on great stocks. It's got a forward PE of 37, but get this, the 3-year revenue growth rate is just under 15%. Wham, bam, thank you, ma'am. That is a tremendous company. Those are our 5 cheap stocks for November. So remember, guys, think long term, always respect the big money, and we will see you next time.